Hey everybody, hope you're all well. Welcome to another episode of EGIL.TRADE, brought to you by the Let's Talk Crypto podcast and proudly sponsored by CryptoFish.com. Sorry about that, my video wasn't displaying. I had to just quickly fix that. Okay, so let's have a look. We're proudly sponsored by CryptoFish.com. It's an easy-to-use, non-custodial platform where you can buy bitcoins, you can exchange, store, earn, and send. You can use euros or US dollars, debit card, credit card, ACH, SEPA, UK bank transfer. Soon we'll have Wire, Poly, and Ideal payments. There's also an absolutely free learning section where you can learn all about Bitcoin and blockchain and cryptocurrencies. All right, let's jump straight into the Coin 360. As you can see, Bitcoin just had a little bit of a pump. I think we've just moved up about $200-300. Things are looking a little bit more rosy today than they have been over the last few days. I haven't been recording because I have been a little bit busy with real life. But look, it's a sea of green at the moment. It's nice to have a little bit of a pump. Is it going to be an anemic little failed rally? Well, time will tell. We're going to have a look at the charts very soon. Let's have a look at the fear and greed index. It's now ticking at a 39. As you can see, it's come back into the sort of more fear side of the index. And why is that useful? Obviously, the extreme reads, you tend to get a counter move in price action. Okay, let's jump into the charts. What do we have here? All right, I've got the one-day chart up. As you can see, we've still got a golden cross here, so I can't really be bearish on something that's got a golden cross like that. And generally, golden crosses get played out very well on the one-day time frame, as well as the 12-hour and 2-day time frame. The lowest that I normally look for a golden cross in terms of time frames is the 4-hour time frame, and we still are in a healthy situation on the 4-hour time frame. Although we have got a death cross on the 1 and 2 hour, 3 hour and up is still in positive sort of golden cross posturing. So right now, as you can see, we've just pumped up a few hundred bucks. We've just taken the 21 EMA on the daily. It's obviously not closed, and there's going to be a bit of selling pressure there, as well as you can see that we've got this last little order block over here, where some people are probably entering shorts or at least taking profit as the price reaches this area. We have hit the 10 SMA and the 50 SMA, if I'm not mistaken, on the one day. I do have this little trend line here that I've drawn on a 4-hour time frame, which we'll have a look at soon. Otherwise, I am pretty neutral here. I do feel like we've got a little bit more upside to go. I want to see us hit around about the 93. I think we got up to 92 there, 9,200. I want to see us hit about the 93 area here. You'll see I've got this little order block there. And potentially even up to the 95, 96 area. But I think 93, 93.50, 93 to 93.50 is the next area to watch. We could get there. On the 2-day time frame, we're still in golden cross territory here. You'll see they are gaining in divergence. We have come down, tested the 21 EMA, which is fine. We've also just tagged the 200 SMA, and now we are having a bit of a pump, which is fine. I see prices coming down a little bit here. You probably find there's a little bit of profit taking. And nothing really to worry about. But what is concerning is that we do have the stochastics on the 2-day turning down. We do have on the 1-day, I believe it's still down, but maybe losing a little bit of momentum as it's approaching the bearish control zone here. The 3-day is also down, if I believe. No, the 3 days crossed up. Well, that's interesting. Well, it's hinting at a cross up. It hasn't crossed up yet. It's just hinting at a cross up. And I think we get a closure on the 3-day. Oh no, we've just had, okay, this is a brand new 3-day candle. So yeah, well, we need to see where this 3-day ends to see if we actually get a confirmation of that stochastic crossing up. What is interesting and what I am keeping a close eye on is a potential cross up on the 12-hour. And now why is that significant? Well, as I've been saying before, these 12-hour stochastics have been almost like a cheat code for Bitcoin over the last year or so. Generally an uptick, and we get a lot of price action going up, and downtick, and we get a bit of a dump. So with it going up, that is one of my many signals that I look for, and potentially, I think we could have a little bit more sustained up move here. We are finding a bit of resistance, I see, on the 12-hour 21 EMA, but it's looking healthier than it has looked over the last few days when I wasn't recording. So for full disclosure, I have taken a long. I didn't catch the bottom. I got around about 80, high 88s, low, average in about 89. So I wanted to see a little bit of sustained up movement or uptrend on the lower time frames, which I have seen, including regaining of the 1 hour, 2 hour, 21 EMA. So I've taken a short position, long position, and I'll be looking to see how we react at the 93 area if we get there. Of course, we don't have to get there, but I am leaning towards us getting there. The 12-hour stochastic's about to cross up. You'll see that the 12-hour RSI is also about to regain its exponential. That's good. You'll see the 10-hour, which I like to watch for me as a leading indicator into the 12-hour. It has crossed up, and it is gaining sort of momentum. Trajectory is right up. It has regained its EMA on the RSI like that. And let's just look at the liquid zones here, or the order blocks. You see that this area here that I've got marked off, the 93 to 94, oh, yeah, 93, 94, it could be to 95 as well. That little area in there is our next proper level of resistance. You can see how we've also tagged this trend line I have here that I did mention. I said I would show you. This is the 4-hour time frame. You'll see 1, 2, 3, we broke through. We could just be testing broken support here. We had a little bit of a channel that we've broke back into here, smaller than the greater channel, which is down here. But it looks like we've come back, and if you can actually see, and I'm actually seeing this for the first time now, we've actually just tagged it. That's it, basically. So if we can start to close candles above, I would say where this channel is here, let's say the 92 area, then I do think we're going to challenge the 93, 94, and maybe even 95 area up there. That's where I think we might have a bit of a stiffer resistance. If we can break up there, then I think we're going up to 98. I'm not leaning that way this time. I actually do think that we're going to find quite tough resistance at the 90, 94, 95 area if we get there. Okay, so also on the 4-hour time frame, you can see the stochastics turned up. In fact, all the way down. I think you'll probably find 1 hour is also reversed. Oh, no. 1 hour is losing a bit of momentum here, but that's fine. The 3 hours up, 2 hour up. Yeah, it's looking all right. And if we get this 12-hour cross up, as I was saying, it's generally a bullish signal. It's been a bit of a cheat code. Let's go back into the higher time frames here. We are we are at a critical area here. If we had to break the 87 or 86 area, you can see on this weekly time frame here, if we had to break down below here, I think we could potentially see the very low 8,000s in this order block over here. And if that didn't hold, I would look for us to come and tag my yearly open. Now, why do I keep talking about yearly opens? Well, let's go to the monthly time frame, and you'll see that on the right hand side of my chart, I have got the yearly opens marked out: 2018, 2020, 2019, and 2017. Now, getting messages on my phone. Switch that off. Now you can see that what Bitcoin tends to like to do is to come back and tag yearly opens. We did it in 2018 yearly open. We've done the 2019 yearly open. And shortly after that, and we've come right through the 2020 open, but we haven't come back. We did come back and test the 2019 open, please excuse me, and we have come and gone right through the 2020 open. But what we haven't done is come back and tag after going through it. We haven't tagged this 2020 open, so I would still remain bullish if we had to tag right about the mid 7,000s. I think if we had to break the mid 7,000s, then we've probably got a problem. Even up, I think even down to 68, 69, maybe 7,000. But ideally, I wouldn't want to see us start closing candles below 71.60, which is our yearly open on Bitstamp for 2020. And if we did hold that, for me, that would be an extremely good buying opportunity, a great place for me to manage my risk. I'll know if I'm wrong very quickly, and we'll want to get out of that trade. But I think that if we did come back down here, I'd be looking at some healthy longs and probably move quite a bit of capital into a stronger position there. Right now, though, we're far away from there, and we actually seem to be going up, so that's not really a concern. So what would happen then on the opposite side of things? Well, the monthly close is coming soon. If we had to close a monthly candle above 93, 93.27 is what I have this sort of local high here on the monthly. If we had to close a candle above 93, I would be extremely bullish to see a test of the 10,760 area. Where do I get that from? This is the next local high that you'll see if we do close this monthly above 93. let's call it 93.50. A monthly close above 93.50, and I'm bullish. And I think that we're going to test the 10,760 area and potentially even 11,000 after that and beyond. But first things first, let's get this monthly candle to close above 93.50, and then perhaps we see the mid 10,000s to 11,000s. However, if we do fail here, and if we do fail to take this here, then there is the potential that we're going to come back down and test the yearly open. That's my opinion. And this is not trading advice. This is not investment advice. Do not take anything as trading or investment advice from me or any other YouTuber for that matter, I believe. This is purely for entertainment and educational purposes. So yeah, that's my sort of monthly chart, my macro sort of outlook. Let's go down back to the weekly here. Weekly, we can get into finer detail here. You can actually see we've got a local high here. This is where we had that little bit of a swing pattern failure where we created a higher high on the weekly. We're looking for the higher low. It didn't happen. Smashed it down. Broke all the longs and set the liquidation engine on over I can't even talk, overtime. And ever since then we've had this sort of like V bottom, jump out of here over the last few weeks, about 2 months I would say, and we seem to have made a little bit of a local top, but it's not a foregone conclusion yet. I still like this. There is the potential to regain, if we had to get anywhere above 96, 97, I do think we're going to start to challenge that 10,500 area again, which is very important. Why is it important? Because if we can close a weekly candle above that, we can set in a new higher high on a weekly, and then potentially that is the beginning of an uptrend. Well, it's half of the beginning of an uptrend. We'd be looking for a higher low, and then we're off to the races, I believe, after that. Because generally on the weekly time frame, it's quite simple. When we're in a downtrend, it's bearish, and when we're in an uptrend, it's bullish. It's simple as that. And on the very macro sort of side of things, this is still a high. This is a lower high, but potentially we haven't got a lower low yet. So that is a bit worrying. That would be the more bearish outlook. So let's hope that we can get some weeklies closing above here soon and start printing an uptrend. If you do remember back, if you were around then in the halving of 2016, we didn't exactly pump straight after the halving, the Bitcoin halving. We actually had a bit of a down month, and we played out a bit of down action, a bit of bearish momentum before we made an upward trajectory again. And even going beyond all-time highs, I think it still took like over a year before we actually created new highs. So it might be a bit naive to think that we're going to do it that soon. But then again, you never know, because history doesn't repeat, it only rhymes, and you never know. This time could be different. What I do like about this this current setup here is that the 2-day is still okay, in my opinion. Okay, we have got a lower high. Okay, that's fine, but we haven't set in a lower low. So there is the potential here that we do hold this 21 EMA and we do go on higher and perhaps even break this region over here and potentially challenge this local high over there. So yeah, I am leaning short-term bullish. Macro is looking a little bit bearish, I would say, on the weekly. And all the phones want to ring. Anyway, that's all I have to say for today. Happy trading out there, and yeah, let's watch this weekly close. We're only Wednesday today, and let's see if we can regain this little high here. If we do start closing candles below this 95, 96 area, I do believe we're going to see the low 8,000s and potentially even come back and tag the yearly open around about 71.60. So yeah, those are the bullish and the bearish sort of scenarios, and we'll see you again tomorrow.